Hey Dave, how you doing today?
I'm doing well, Nick. How are you?
Fantastic. I am excited about this episode that we have today. I get to interview you, so this is going to be fun.
Yeah, you're excited. I'm nervous. It's good. Yep, it's good.
Yeah, so today's episode, we're going to find out how a certified financial planner manages their own money, right?
Right, right. And little reality check to have to, confess all your financial secrets the way we ask clients to do.
That's right. Yeah. And so this episode's kind of come out of some questions that we get every once in a while. A lot of times
Mhm.
people think we have some sort of secret that we're keeping about managing finances. So we're gonna look under the hood today and see how the mechanic fixes his own car.
Sure, let's roll.
All right. So when it comes to managing money, Dave, what's your secret to success?
Well, the secret to success in managing money, whether it's my own or, advice we'd give clients is always, make a conscious effort to live within your means, right?
Mm, yeah.
And that is the first thing. And then the other thing that I think that I would say is kind of an overarching philosophy is flexibility and realizing that you're not going to get everything perfect, so do the best you can, make the best decisions you can. And I guess the third thing is balance. you know um, and I think as financial planners we see a little bit of everything, right? We see people that haven't saved enough. We see people that have saved way more than they needed to. um, we've seen people that lived longer than they thought they would. We've seen people that didn't live nearly as long as they thought they nearly as long as they should have. And to me, one of the big lessons as a financial planner that I've tried to apply to our own finances is balance. It's be prudent, think about the future, save diligently, but don't defer all your fun for some later date.
Yeah, absolutely. I love that. And I really like the part about flexibility. I think that's so crucial that, yeah, if you have a plan, that's great, but chances are it's not coming true. So what are
Right.
you going to do when something changes?
Right. And, an example of that, I think, that comes up often with clients is when we were saving for our kids' college education. You and I are both big proponents of 529 college savings plans, but we didn't, my wife and I and our kids together weren't really quite sure what all the scenarios were going to be. So we didn't try to put 100% of what we thought our need was going to be into a 529 plan. So we'd have that flexibility to roll with changes, and it worked well for us.
Yeah, that's great. Great advice. So, I guess the next big question that I have for you is, do you have a budget and do you follow it?
Wouldn't that be ironic if I answered no after all the time we've spent on this podcast beating up the idea of
Right.
budgets?
Yeah.
So, so yes, I have a budget. Yes, we do follow it, and I use a computer program called You Need a Budget. Some interesting things, though, about my own budget and my own family and budgeting is, a lot of clients would assume that budgeting comes natural to me or I wouldn't be in this business. And actually, it's the furthest thing from the truth. I'm not a natural budgeter. I came at it after working with clients and seeing clients struggle. It kind of, it was one of those the cobbler's kid to have no shoes kind of situation where it was like, man, I need to go do this. And then, it's been a long time now since that happened, but there was a period of time there where I wasn't taking my own medicine on that, and it created a lot more stress in my life looking back on it. Um, so my wife hates the idea of budgeting. But we've created a system over time that works for both of us. And I always tell people this. For me, budgeting is the same mentality as dieting. Okay, and that may not click with you because you're much healthier in how you eat than pretty much anybody else I know, Nick. So, which is a compliment. But the same mindset that makes you want to forget about want to eat the ice cream and enjoy it now and not worry about what that's going to mean down the road is the same mentality around budgeting. And so, for a lot of us, we have to make ourselves do that. So, but on the other end of it, the fruit, the rewards of that when it comes to fruition is a lot lower stress level.
Yeah, for sure. Budgeting I think is tough for a lot of people, and what I love about about your how you've done it is you've really found something that works for you, and I think in the world that we live in, everybody's waiting for that simple,
Right.
easy, quick answer. Like I just sign up for Mint, and then all my problems go away,
Yeah.
right?
Yeah. Well, it's just like
Um,
signing up for Weight Watchers or
yeah,
joining the
right,
gym.
exactly. Or
You still
taking
have
the
to, you
magic
still have to do
diet
the
pill.
work.
Yeah,
Right.
yeah.
Right. You still have to do the
So
work.
you do have to not only do you have to do the work, but you have to find out the system that works for you.
Right.
There's so many
Yeah.
different things out there.
Yeah.
What is it that's going to work for you? And it's kind of an evolving process, I'm sure.
Right. Right.
So, yeah, budgeting and dieting, man, we're really hitting all the top
Yeah.
topics today. So, speaking of budgeting, obviously there's communication that goes into budgeting. So, when it comes to finances, not just budgeting, how do you communicate with your wife and with your family when it comes
So,
to finances?
so we have, I'll tell you where we're at now, and I'll kind of go back and tell you how we got here. But the way we do that now, because Amy hates to budget, it's not her thing. But and she's very black and white, so budgeting is hard for her. You're either being super frugal or you're not caring at all. And so what we do, I keep the budget. We both work and we both have incomes. So what we've done is I keep the budget. She knows that every month to meet our goals for saving and covering our expenses, she needs to put a certain amount of her paycheck into our joint account where, we allocate it to the things we need to spend. And that gives her some freedom and flexibility for the part that doesn't need to go to our joint budget, and I have the same flexibility. So she doesn't have to look at our budget and worry too much if she wants to buy some fancy wool to knit a sweater, because she knows if the money's still in her individual account, it's hers to do what she wants with. And for me, if I see some weird old tool on eBay or, need to do something like that, I don't, we kind of each have our own little off balance sheet amount that we can do with as we please, but we know we can do that with confidence because we know that we're going to meet our joint goals and cover what needs to be covered.
Yeah,
So,
I love that approach.
yeah, and what it comes down to is once a month, usually on a Sunday afternoon, she writes down. She likes to do things on paper, so she like puts down what she spent on what her groceries came to for the month, and what her different expenses that do go to the joint budget came to, and I punch those into the software and make sure that we did okay the previous month, so that we can do it right the next, as so I can go ahead and then allocate what we need to do for the next month. That's how we do it.
Sure. Yeah, no, I love that. I love what I see a lot of times where people, especially couples, get into trouble is one person's doing the budget and they're dictating to the other person exactly
Right.
what they can and can't do. And that I've never seen that work out well,
Right,
to be
right.
honest.
Well, yeah, and so she gives me her expenses, but then when I'm figuring out the next month or the next couple of months, I'm going back and saying, okay, we didn't spend as much on this as we thought we would, so I'm moving that money to this, and we've thought of a couple things we want to do. We need to start squirreling a little bit of money every month away for that trip next spring or whatever that is. So yeah, there's those conversations, and that's really what it's about. When we're fortunate enough to be in a situation now where budgeting doesn't really have to be too stressful because with the kid, our youngest is almost out of college, and we're in a position now where we've got a little more leeway in our budget than we used to. So it's usually pretty
Sure.
positive.
Yeah, yeah. Well, that and that comes with the hard work that you put in from the beginning, right? Those years
Mhm.
of budgeting and paying attention, paying off.
Right, right. To get to the point where you know pretty consistently what most of your expenses are going to look like, and you've also saved, been able to save so that those one-off things aren't a surprise anymore. And yeah, that takes effort on the front end, but it's worth it on the back end.
Yeah, for sure. So, speaking of your kids, what do you tell your kids about money? How does that conversation go?
So I have two very different children, uh, and one is 26, almost 26, and has her first real world job. And she actually texts me when she's coming home to see if she can set up an appointment with me to go over finances. And she knows her budget very well and is very responsible. I think she does a pretty good job finding balance. Sometimes she needs to be reminded that it's okay to, do some fun stuff too. Um, and but she knows what she's got, where it is, and what things will cost her. My other child isn't a problem from a budgeting standpoint. He doesn't really care about money, but he also doesn't really like to spend money either. So it's it kind of balances out, I guess. I don't really have a complaint about either of them in that regard.
Sure.
They they at least are responsible and conscious of their and I think that's a lot of it with being a young adult. Maybe my kids are a little older and beyond that, but just being conscious of what's coming in and what's going out in a way that I wasn't when I was like 17, 18,
Yeah,
19, in a way that I should have been.
sure. That's awesome. Um, Switching gears a little bit, one of the questions we get a lot, especially now, is I've got cash in the bank. Should I invest it? What's your happy place when it comes to
Yeah.
investing versus holding out cash, and how do you figure that out?
Yeah. So this is an interesting one because I think my like personal situation would maybe surprise people a little bit. In that I do tend to, and my wife and I do tend to have a fair amount of cash savings outside of investments. The way I approach that with clients, though, is pretty much the same as I do in my own life. It's first and foremost figure out what the money's for, right? And again, it goes back to the budget. But if the way I look at it is, if that's money that we're likely to spend in the next 18 to 24 months, it's going to be in the bank, and I'm not going to worry about what I'm making on it. And right now I probably have more cash savings than normal because there's some things we've talked about doing that would be fairly expensive. And despite the fact that bank accounts aren't paying anything, I'm more concerned with being liquid if we decide we want to do some, home renovations or some of these other things we've talked about. Um, in general, then too. So, we talk about risk with clients, and we tend to talk like overall, like what your portfolio should look like. Mine, my overall risk is maybe to the growth side of moderate, if you will, but it's lumpy, right? Like I've got a lot of safe money in the bank, but then you look at my long term money, say, retirement savings. I've got, it's wild and crazy, full of uh, full of equity exposure, and um, rather than having that market risk spread out across the board, it's, my short term money is safe and sound, and my long term money is wild and crazy because I know over the long term that'll pay off.
Yeah. Okay. Yeah, it just seems like, you get people that are so worried about the cash they have and not earning very much
Hmm.
recently. constantly, and it's, and
Yeah.
sometimes we have to walk them back and say it's better to not lose money sometimes than it is
Right.
to make it.
Right. Well, you shouldn't keep more cash on hand than you reasonably need. It's just a question. So back to that idea of flexibility, when you don't know the answer to some of those questions, I err on the side of caution. There's a good chance, I'm probably being a little too careful right now, but based on some things we've talked about, that seems to be prudent. But what we tell clients is kind of the same thing in a way. Figure out what you need for an emergency fund, contingency fund. I prefer that word. And there's the old rules of thumb about 3 months to 6 months worth of expenses. And we fine tune that with clients when we talk to them about what makes sense for them based on their job and what kind of weird stuff can happen in their life. It might be more, it might be less that they need, but then add to that anything you think you're going to spend in the next 24 months. And, whatever that number comes to is what you should target to have in the bank. And if it's above that, then you can kick that into an investment account. And so, back to the budgeting idea, part of what we do every month, I have we save into our employer retirement plans automatically. We don't even think about that. We try to do as much as we can there. And in our personal budget, then, when everything else is met and we know we're in a good place, every month we have a certain amount that goes into an after tax investment account rather than just sitting in savings. But that's money that, all things being equal, is still going to be there at retirement.
Right.
So, I don't want to let the savings account build up just for the sake of letting it build up. I have a target in my head, and every month, what I add to my investment account, I have a set amount that goes in every month, but I try to put more in, and in most months I'm able to. But that way I've got some leeway if the hot water heater dies, or we decide to go on vacation, or things change. I'm not locked in with that full amount. It's flexible.
Yeah. No, I think that's a great point. And to go back to one of your earlier points, the offsetting of, yeah, you might have a little bit more cash than what people might think, but to offset that with the other investments, and because you can take more risk in those because you do
Right.
have cash. And sometimes I think people forget that when they're looking at investments and their
Yeah.
whole entire picture, and something that
Yeah.
we definitely try to work with clients on.
Yeah.
So going to the other side of the balance ledger here, what about debt? How do you handle debt when it comes to your personal finances?
Yeah. Great question. So I draw a distinction between like good debt and bad debt. And, good debt is a mortgage. I don't mind having a mortgage, and I don't mind having a car loan. But that's it. That's pretty much where I draw the line. And there have been a few times in my life when I've had some, a little bit of personal debt, because it was easier than getting an equity loan, or doing something different for something we needed to do. But we've always been pretty conservative with that, and tried to make sure that we never owed more than we could reasonably, budget and handle. So, and with car, you can finance a car really cheap. The big thing with cars, right? I'm not a car guy. I'm not I need a reliable vehicle that I can get to and from client houses. I can get around in the snow. And, but it doesn't need to be, the Maserati of cars that can get around in the snow, whatever that would be. I guess a Land Rover, but it just needs to be reliable and dependable, right? And I think that's a distinction too. Just because I'm comfortable having a car loan doesn't mean I'm ever going to overdo it. I have in my head a number that I'm comfortable making a payment every month, and I wouldn't, just because the auto dealership or the bankers would let me have a bigger car loan, I wouldn't do it. So, and that's true. think in general that's true with housing too. You need to be careful. Just because you can borrow more doesn't mean it's a good situation. You need to, you know, it's a little different now than it was 15 years ago. Pre-financial
Sure.
crisis, it was a lot easier to borrow more from the bank than you should be able to, and now the banks have gotten a little bit more in line. But at the end of the day, you're the one that needs to decide if that mortgage payment, do you really need that big a house and that mortgage payment? So anyway, I'm taking a long way to answer. I'm perfectly comfortable with a mortgage on a house that fits my overall financial situation. And I'm not one of those people that thinks I need to pay my mortgage off before I retire. I have clients fall on both sides on this. I'll be one of those people that, as long as mortgage rates are low like they are right now, I have a 3% mortgage, and we just refinanced it. That would make me in my late 70s when it's paid off. I'm perfectly cool with that, because for me, at 3% locked in over the next 30 years, I will invest the I'll invest my money and make the payments from investments rather than try to pay that off faster than I have to, because I know over time I should make more than the 3% cost on that interest payment. I've also worked with, and I just had this conversation an hour ago with a client who really is just not comfortable, even with a low interest rate on her mortgage, carrying it into retirement. So we're making a plan to pay it off, and so, like so many of these things, what's right for me and what I'm comfortable with does not necessarily mean it's a one size fit all prescription for financial planning. The way we talked about it with that client, and I know you've had these same conversations 100 times. For her, that she was at about 3.5% on her mortgage, knowing that fixed cost was out there and she was obligated to make that payment, wasn't worth the hypothetical amount she could make above that with, taking some risk on some other money. So that's perfectly valid. There's a mathematical answer, and then there's the right answer for an individual, and they're not always the same thing.
Yeah, that's such a great point, and it's something that we talk about a lot and talk about on this podcast. But the danger of doing a podcast like this is just because you do it one way doesn't
Yeah.
necessarily mean everybody
Well,
should. So I'm glad you brought that up.
yeah, and to me, that's one of the things I harp on when people talk about things they've heard on the radio or read in books. It's like you're reading one size fits all advice, and it's not. They mean well, and there's a few particular people I'm thinking of, and they mean well, but it doesn't fit for everybody.
Yeah, absolutely. So, tell me, is there something that you wish you knew when you were younger that you learned as a financial planner?
Well, you know, it's interesting because we had our daughter when we were very young and still trying to figure out how to do anything. And my people asked me, what my finances were like in my early 20s. It was like, well, I was trying to pay off the diapers we put on credit cards. You know, and so as a financial planner now, there wasn't anything I could have done about that, right? I mean, that was our reality. But I really really stressed about it, and we felt like we had to get it all fixed at once, and we did, and we did fine. But I think if I was advising myself at that point, it would have been more along the lines of just relax. You're gonna this will work out. It's play the long game here a little bit. I still don't know what I would have done differently. Um, you know, Back to budgets, I would have started budgeting earlier because that would have evened things out. And back to the idea of not being a natural at any of this, I would, left to my own devices and not being exposed to um, real world financial planning, dealing with clients when I was in my early 20s and working with clients that were in their late 50s and 60s who hadn't saved enough, was the jolt to say, okay, no matter what, I'm going to start my 401k as soon as I'm eligible. I wouldn't like if I had not gone into this field at that time, that would not have been my natural inclination. You know, and I was not trained in finance in college. This was not my degree was in political science. I was hoping to work for the State Department or the CIA or pretty much anything not involving math. And and so I
Here you
came
are.
out right, and so I came out and had to and went into this field kind of by chance, and no regrets. I think it's the best thing I ever did. But part of that was um, getting me to start thinking about my own money in a way that was not natural to me at the time.
Yeah, no, absolutely. And I like the point about, stressing out when you're in your 20s because I feel like everybody kind of goes through that and
Right.
you probably couldn't have done anything different, but just imagine, being able to not stress so much
Yeah.
and knowing
Yeah.
that everything was going to be okay, I think is a huge thing. And a lot of credence to, we have younger people that we talk to and work with on some cases. In a lot of cases, we're trying to help them find a financial planner that will be a better fit for them. But just to be able to
Hmm.
work with someone to not worry about the stress and to know you have a forward looking plan is a
Right.
huge thing, you
Right.
know?
Right. Um, Yeah, and people complain about the younger generation, and I'm sure it's partially a function of the folks that seek us out. But I'm always the one that says, well, they're not all financially irresponsible. They're not. We've seen some pretty astute folks in that 20 to 30-year old crowd.
Yeah, absolutely. Absolutely. So speaking of stress and emotions, how do you handle investments and especially what about the emotions that come along with investments?
So, yeah, it's funny because there's two different answers here, and I think you'll be in tune with this. The markets stress me out because I'm a financial planner who has to help clients. The markets don't stress me out about my own money at all. It's almost like a split personality. I got started in this business in February of 2000. And if you pull out your stock trader's almanac, that is about a month before the NASDAQ peaked from the tech crash. And so for the first 3 years of my career, nobody made a dime in stocks. And it was, and I remember my manager at the time just saying, "It's not always going to be like this." And I was like, "Yeah, right." Whatever. I have people crying in my office every day. It's not always going to be like this. But so in a way, and we came through. We've seen these rises and these falls, but ultimately rises, right? And so personally, when the market drops, I'm still in a phase of my life where that's an opportunity. Okay. And so it doesn't bother me at all from the standpoint of, oh gosh, my 401k just dropped, 10% last month. What am I going to do? Well, what I'm going to do is I'm going to shovel more money into it.
Right.
That's my approach. Now, when my wife asks me how things are doing, I just tell her everything's fine and I smile because that's not her
Right.
personality.
Yeah.
but if that doesn't bother me at all, where the markets bother me is looking at my calendar and saying, oh, I've got to meet with so and so and they're going to be stressed. But that's part of the job, and that's just the nature of it. So really, to answer your question, I'm the ultimate contrarian with my own money. When everybody's excited and exuberant, that's when I start to be a little more cautious because I still remember, you know, March of 2000 when 89-year-old Grandma Smith would come into my office and say, "My son-in-law says I need to put all my money in MCI WorldCom." They would say it with a straight face because at that point everybody believed that the market was just going to especially .com stocks were just going to keep going up. And we
Yeah.
joke about like looking back on that, that was our indicator, right? That it was time to be careful. And, at the same time, I tell this to clients all the time when they come in and tell me how worried they are about stuff. That's, to me, that means that things aren't, when they tell me that they're just afraid the market can't keep going up the way it has, then, the more people that think that, the more likely it is it can keep going up. And
Right. Yeah.
so,
Great
you
point.
know, that's, when everybody's putting their last dollar in, like Grandma Jones buying MCI WorldCom, that's when it's time to hit the exits. So I tend to be pretty non-emotional about my own money in the markets and try to take advantage of the ups and downs. Again, having that solid cash base where I know that if the markets took a severe downturn, I've got two 6 months worth of expenses and everything I plan to spend on top of that, just in the next 2 years is in a nice safe savings account. That gives me stamina to ignore the long term money.
Yeah, for sure. For sure. No, I like that. So, the last question I had on here for you is, do you have some sort of complex secret that you don't tell clients that you're doing with your own money, like
You
a
know,
super backdoor Roth IRA or something crazy?
well, first of all, no, I don't. And for me, and it's not that some of those strategies aren't valid for certain people, but in my situation, there's just not a lot I can do that's fancy from a financial planning standpoint. If there was, we'd be doing it. What I try to, we try to put as much as we can into our retirement accounts. For us, using pre-tax accounts rather than Roths makes sense, but I'm always looking for that opportunity if it makes sense to do something different there. But these aren't, secret things. They're the same things we talk about with clients. I think one of the things that surprises clients, especially given when I started out, it was more of a picking stocks kind of role, and I think sometimes when we recommend these index based, fairly passive type of strategies, quantitative strategies like dimensional funds, and they seem kind of boring, right? And I think people think that in the background I'm telling them to do that while I'm buying 50 shares of this and 200 shares of that, and doing fancy covered call strategies. And there have been times in my life when I did that stuff. I don't own a single individual stock right now, not a single one. And my portfolio, my IRAs from previous jobs are in the same exchange traded fund models we use with clients, albeit I'm using a riskier one than most of my clients, but it's the same strategy,
Yeah. Right.
um, our 401k plan uses dimensional funds, which we recommend a lot to clients. I'm using dimensional funds there, and pretty plain vanilla long term kind of stuff. A little bit of emerging markets, a little bit of real estate, but pretty generic. Um, so there's not a lot of difference between what we recommend to client. There's no difference right now between what we recommend clients and what I do myself. There have been times when I've bought individual stocks. I was still doing a little of that up to 3 or 4 years ago. And I just said, you know what? I'm just spending I'm worrying about this too much. Same thing I would tell a client, just part of it was I just enjoy, I remember telling a client this at the time. It's not that I'm expecting that's going to outperform the other things I'm doing. I just kind of enjoy it. And it shouldn't do any worse,
Yeah.
so it was more about staying engaged when I wasn't doing a lot of that for clients anymore, but still enjoyed the research. But at this point, I'm not doing any of that. Um, you know, a lot of other things along those lines, like I think clients expect that I'm probably like buying rental real estate and doing all kinds of fancy stuff to get depreciation and pass through, write offs and things. It's not for me. It's not that some of that stuff can't be good for the right person. I've been a landlord for a couple of years of my life. Absolutely hated it. Not for me. you know, and we've had that conversation before, so I won't belabor that. But it's pretty plain vanilla. I wish it was more exciting, but it's not.
Yeah. No, well, I'll tell you one of the things that I've learned in working with you over the last couple of years is, simple is all right. There's something to be said, but to have a simple strategy, you don't need a complex algorithm computer program to tell you when to get in and out of the
Right.
market. You can be passive and still be successful. And so, and I agree with all that. And so that's definitely one of the
Yeah.
things I've learned from you in the last couple of years. And, it's not sexy, it's not exciting, but it gets the job done.
Yeah.
Let you
Yeah.
focus on other more important things.
Right. And, we've always got to keep in mind that Wall Street spent the last 100 years, 150 years convincing us that you could, if you just made it fancy enough, you could do better. But really that was about marketing more than anything having to do with reality.
Yeah, really. The evolution of we don't, that's why they don't have commissions on stocks anymore because they found a
Right.
different way to sell you something. Not
Right.
that they're
Right.
still making money, I guarantee you.
Oh yeah. Oh yeah. Oh yeah.
So, well, this has been fantastic, Dave.
Good.
Appreciate your
Yep. It's been
insights.
fun.
Hopefully, the clients enjoy this. And as always, if you have questions, please email us at info@srbadvisors.com. And definitely subscribe to the podcast wherever you get your podcasts. And look forward to next week's episode where we reverse the roles. So you can
Yeah. Yeah.
pull
Be
back
next
the.
turn.
We'll pull back the curtains on how I manage finances.
All right. I'm looking forward to it.
All right. Thanks, Dave.
Thanks, Nick.